What's going on, everyone? Gelman with Wellthy Stocks, back with our weekly Apple update video, ticker symbol AAPL, where we take a look at how Apple traded this past week. We'll take a look at key levels of support and resistance that are coming up for the stock, and based on that, what we think Apple stock could do this upcoming week. So real quick, as always, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let me go ahead and hit record, and we'll get right into the video. So actually, Apple ended the week on a slight green note. We're up about 69 cents on Friday, up another 28 cents in the after hours. So let's take a look at the 5-day chart and see what we see there. So you guys remember Monday we got, Tuesday we got a nasty sell-off, right? So Monday wasn't too bad of a day. We pushed up just a little bit, and then kind of settled here in the low 130s. And then Tuesday we saw a massive sell-off going as low as the 126.60s level. And then Wednesday tried to push up into the 130s. Couldn't do it. Thursday tried to push up, and then Friday we're now finally above the 130 level. So in terms of Apple, what did we have? Let's take a look at this daily chart here, and we'll see what we see. So we had that bull pennant that was forming, you guys. We broke out of that one from the 120s to the mid 130s. Earnings were great. We saw double-digit growth, better growth than we've seen in many Apple quarters. And that kind of took the stock up briefly in the after hours to 139. However, the next day it opened in the 137s and went all the way down to 132, and the sell-off continued after that. And now we are seeing a little bit of a maybe consolidation period push up. So point being, we don't really have any catalysts coming up, right? We had two catalysts, one being the spring loaded event, where we got a bunch of events like the iMac, we got the AirTags, we got the purple iPhone, and then we had earnings, which were great, but now we don't really have anything to look forward to. So I think for now, I think Apple will start to maybe taper off a little bit. We're not going to see huge movements. That's my guess. So let's take a look at key levels of support, key levels of resistance. So first level of resistance we're coming up against is this mid 131s. And then, so the next three levels are 130, 145, 132.52, and 133.45. So mid 131s, mid 132s, mid 133s. On the support level, I think 130 is a really, should hopefully hold up as good support. I would like to see it validated once though, because we haven't really had it validated too many times. But if not, we've got the 128.54, and then the last one that I'm looking at is 126.65. My personal thought is that 126.65 is going to be kind of that last point. I personally would not. I mean, it could. Anything can happen, right? But I think taking a look at the way it's traded, the way it bounced on 126, I would like to kind of guess that it would bounce at 126.60s. Of course, no one can predict very, very, accurately, but our levels have held up really nicely, so that's what I'm looking at here. I think if I were to guess, I think we maybe go down to validate the 121 low 130s, and then we maybe start to push up, hopefully ending the week in the 132, 133s. Ultimately, what I want is a push towards 135 and see how it reacts. If you guys take a look here over the past, this 2-week, 3-week period, we were just hitting up against 135, 135, 135, not really able to break above it. The one time we were above it, we opened, we sold off immediately, came all the way down to 133s, 132s. So that's what I'm looking at, guys. That's what I'm hoping for. The EMAs are looking decent as well. We hopefully start to push up and end up above the 8 EMA, which is at 130.61. And then the 21 EMA at 130.74. If we're above those, then we can use those as a little bit of a level of support. And then the 89 EMA again also comes in at 127.50. So again, if we go down, 126.60s and 127.50s should hold up as pretty good support. But yeah, hoping that we can kind of establish that 130 level of support. If not, 128.54 as a level of support, and then start to push up kind of between 132, 133, eventually making a push towards the 135 level. What I want to talk about here for just a second is this article here talking about Apple being slightly undervalued. Now I know some people say Apple's overvalued, some people say Apple has long ways to go. I personally am a long-term bull on Apple. I've held the stock for a while and probably will continue to do so for a while. And just the past year, it's provided over 90% returns. Sure, the past few months have not been great for Apple, but I don't think we can expect a company like Apple to give 90, 80, heck, even like 30, 40% returns, right? The S&P historically has given anywhere from 8 to 12% returns over the long term. So I think as long as you're beating the S&P 500, your money is invested pretty well. So this article talks about they're doing a discounted cash flow method, which implies an upside of 45% for the Apple stock. The DDM based price target suggests a 50% decline. That's not bad. So they take a look at price versus growth. And what they were taking a look at is, hey, for a while there, we thought that Apple's sales were going to plateau, but obviously with this past year and the pandemic sales that we've seen, that isn't necessarily true. We saw iPhone revenue hit all-time highs, and it wasn't cyclical, right? And I think the part of that reason is because the iPhone 12 was the first 5G iPhone, as we talked about, causing a wide kind of people looking to upgrade their iPhones. So that's what they're talking about here with this trend. They talk about the acceleration of Mac revenue. They talk about the iPad revenue and kind of how that's gone up, which is absolutely great to see. They talk about the wearables, home, and accessories, which is another kind of topic that we've touched on recently. And then the services, right? And that services revenue, I think, is really important because it's a recurring revenue. Regardless of what time of the year it is, I think it can be a great continuous form of revenue for the long term. So total revenue is here, and then they talk about there are no signs of approaching the quantitative limit of the company's growth, and they also talk about model based on data in the last 10 years. The company's still overvalued, even if we take into account the expected growth in the coming quarters. So this part of it talks about, maybe they're a little bit overvalued, which does make a little bit of sense, right? If you take a look at Apple growing 90% stock price wise, the EPS, a lot of those numbers, a lot of those technicals don't necessarily add up, right? The company is not seen, it's not 90% better than it was a year ago, yet the stock price is trading at 90% higher than it was a year ago. So that's what we're seeing here, you guys. And then if we keep going, right, we keep researching. If you guys are interested, this article is on Seeking Alpha. I'm not going to cover the whole thing because I think it's, a lot. But that's what this article talks about. And then if we keep going down, then it takes a look at Apple as a comparison to a lot of these other big FANG companies, right? So you got Google, Facebook, Amazon, you've even got PayPal, Micron, and Tesla in there. And what this is doing is it's taking a look at revenues, and it's doing forward-looking price as a numerator to share price. And so you see Alphabet, which is Google, 5.76, Facebook 6.6, Amazon 2.92, PayPal almost 10, Micron 2.7, and Tesla 11. Apple is got a median of 6.2, 5.95. So it definitely is a little bit lower than the median, which implies a share price of 136 as the median, 79 as the downside, and 195 as the upside. So this article is really cool because it takes a look at Apple from a wide variety of different ways, right? Like I said, the first thing we looked at implied Apple was a little bit overvalued. This taking a look at forward-looking earnings or forward-looking revenues implies that Apple has a little bit of an upside. Taking a look at the discounted cash flow model, however, is where we kind of really see how Apple can be different, right? We're talking about operating margins increasing to about 35, and that's not very uncommon to see from Apple. Then we take a look at a lot of these other factors. So we get capex to be 4.7, we get margin to gradually grow to 30, tax rate we're thinking will rise to 25, which is probably true. Weighted average cost of capital comes down to 5.97. A lot of these terms you don't really need to know, but the point here is if we zoom in, fair value per share right now is $188. I've done something similar myself, and I'm pretty close to that number too. I think mine was kind of high 170s, low 180s. So I agree with kind of a lot of the hypotheses that they're using. So that's what we're talking about here. The dividend discount model implies a downside because Apple's dividend is not that great, and we know that. So, not going to worry about that there. So just wanted to quickly cover that, right? From a lot of perspectives, Apple is a growing company, but we have to understand it is a $2 trillion company, so it's not going to grow the same way as a lot of these growth stocks like I covered, like NEO, Palantir, all those. I think for Apple, if you're an investor, long term, it's always a good idea to, in my personal opinion, hold and sell covered calls, or hold and wait for the upside, because I think you'll, in most years, if not always, beat the market and beat the S&P 500. So that's all I had for you guys today. Hope you guys enjoyed. If you did, don't forget to drop a like, subscribe to my channel, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.